Good morning, everybody. I think I confused people by having two of these streams up at once for today's pre-market. So see who shows up and who doesn't. Let me just flip this on real quick and we'll get started. But I think that I should have just probably put that out later in the day. I think that would have been a much better idea. So let's go to here and flip to this and go. We should be good now. Great. Perfect. Good. Okay. So we're live. I have to see who comes in, who doesn't. Usually we're pretty active in the morning. I think the idea of putting the two different streams out there is going to throw some people off this morning. I should have thought that through. So there'll be another stream today at 2:00 when the Fed goes live. I'm just going to go live. I think that that's extremely helpful to people. We'll talk about the rate hike and we'll talk about what to do going forward. But that's really the pertinent, what I think is pertinent piece today for me to go over. But let's get into it. Smash the like button. I do appreciate that. So let's take a look, John. I mean, there's a bunch to go over here, right? So this is where you're at, and this is the prevailing wisdom, okay? And this is from the newsletter. If you don't get the newsletter, there is a link in description to get the newsletter. Now, what I think is really important for people to get is this, and I just want to go through this. So this is the rule of thumb, okay? The rule of thumb is once you have this cross here, right? Once you have that cross, the rule of thumb is the 200-day becomes your resistance point. Okay, that's the rule of thumb. Whenever you have a death cross, right? Rule of thumb states that resistance is the 200-day moving average. Okay, it's never that easy. It's been that easy this year. And quite frankly, I'm shocked by how easy this has been, how super technical we're being. So we try to flip here and it doesn't work. We try to flip again. It does not work. That does not mean that this is over. Okay. It does not mean that we're going to roll back down. So I try to take my cue from some of the earlier signals and see if there is some kind of pattern there that we can find. And what we'll do is we will see that this entire move down started up here with the 20 crossing the 50, which was not ideal, right? Back in January. So we can see that that's obviously not ideal. We can see that cross back up here that did not hold, and then that reversal, right? So by the time we broke and reversed, the 22 was coming down. So just understand that. Let me just go through this. So the 22 was coming down and crossed the 50 after we rejected here. Okay, this is where we rejected, right? This is where we rejected, right? See how long it takes for that to happen? So this could take a couple weeks to see if this is going to actually hold here or this is going to be something. The signal to look for to see that this is definitely in place is not going to happen until this happens. And that could happen here for sure. Absolutely it could. So we have to be cognizant of it. But if we look at these lines and we drill into this, I mean, you're right there. I mean, like it doesn't get any cleaner as far as your area. And all you've been doing is basing. That's all you're doing. I mean, I hope people can see that, but that's all you're doing. This was resistance right here. And that resistance has flipped to support. That's the game, supply and demand. So that means you have more demand. So I think that that's really, very pertinent. If I take this out, you'll see it even clearer. So that's really where my focus is today. And I would suggest that that's where your focus may want to be as well. So just, just keep that in mind, and then we will, we'll go from there. But overall in the market, I didn't really sell yesterday. I mean, I really wasn't into trying to short this. I thought that was, a really scary proposition, quite frankly. because you could have just ripped on those numbers because they were so good. But I think JP Morgan and Goldman put such expectations in the market that when that happened, people were just like, you know what, get me out. Just get me out. And I think that's what we saw there. So keep that in mind. We will be going live today at 2:00. Hey, what's up, Mustafa? We can talk about the VIX. I think talking about the VIX is a really good idea right now. So you have this complete and utter meltdown in the VIX. And if you really, what's so fascinating about this meltdown, right, in the VIX is it really was not mimicked in the index too much. So you have all this where you're just, you gap down and then the VIX is filling all day long. And then around 12:45, you see that reversal. Then you come here around that 12:45 time. It kind of marks the bottom, right? When you see that reversal, when that starts to happen. So there's a little bit of a signal there. And perhaps you could use the VIX and say, this might be an area that we might turn, right? This might be an area that we should probably want to see. Like if that's going to be the peak, right? This kind of gave you a signal right here before we even turned, didn't it? Right before you had anything super technical in here, you had a trigger right here that you could have looked at and said, oh, look, we're breaking right there. And then the moment that happens, look what happens. And then you never take out that low. Now, there wasn't a lot of money to be made there, but I think that's pretty interesting. So all we did yesterday again was what? Gap fill. Who cares? Like I don't really view that as the end of the world. Did the SOX gap fill? No. All right. So the SOX didn't gap fill. We have this wonky thing right now, right? So you go out there and take a look at this on a hourly. Okay. And what do I have? Well, I have an island. No matter how you slice that, you have an island right there. Okay. So now I have an island reversal possibly on this market. So why would this be a reversal? Because I'm breaking here, right? I'm breaking right off of this, and then I'm rallying up, and then I'm breaking down. So I'm actually going, the island is actually bullish, and the next move was down. So that's actually an island, bull reversal. It's actually a bearish island reversal. And they're not really negated until you get to the top of this. Now, I don't know how this is going to play out with quad witching. We never know. But I would consider that, and it's definitely something I would look at. I would not be, all worried about this bar at all, quite frankly. But I think that you should look at the VIX right now. I think that would be very helpful to people. Let's see what we have here. Good morning. Thank you. Yep, it'll be fun. Yeah, I think it'll be fun, and I think it'll help people. I think a lot of people are a little fried from yesterday, quite frankly. It's been like a war lately, just how it wears on you. Good morning. How do you see Tesla and Amazon going? Yeah, I mean, hey, Jen. Yeah, I do think that, but there's something really glaring with Tesla that I think you have to take a look at. So this is how I see Tesla. So you can see the volume down here, right? And what I'm going to do just for purposes of this is I'm going to blow this way up, okay? So you can see that volume blowing up. And I'm only going to go out a year, right? For now, I'm only going to go out this year. And you see that level? So this is extreme selling. Now, it doesn't look that bad when you're down here, right? So when you everything's perspective, right? When you're looking at there, you're like, oh, it's not that crazy. When you blow it up here like that, and you look at this, Jen, look, watch this. 175 million shares. Your average volume is 875. Okay. So people are puking the stock out. Now, what I like to do with these dates is look at them and see what happened on previous absolute puke levels. So here's one. Now, what happened? We puked, came down, tested and rallied. Okay, didn't take out new highs, but so this is where we puked again, right here. Okay, and then what happened? We went higher. The point that I'm getting at with this, and you can go through this to all these events and go and take a look at this, and this is really what I do in my free time instead of watching Netflix. But you see how you can see what you're always looking for is patterns, right? Everything that I do and what I think people should do is I think people should look for patterns because it's all we have to determine if it could happen again. Nobody knows what's going to happen, right? There's no gurus. What we're doing is we're just using the information that we have and trying to ascertain what may or may not happen, right? To speculate essentially, and then put good money management around that. But so does that mean that, oh man, I need to buy this right now? No, but it does mean that, boy, if everybody sold, and you think about it from that perspective, if everybody sold, who's left to buy or who's left to sell? So if you think from that, it could be setting us up here for some kind of bounce. I would drill into some of this and just kind of look at it and go, okay, well, where's the RSI? Well, that's not good because the RSI didn't really make a lower low, which it should have here. So that's going to be a problem. We're going to want to really watch that because that's a negative RSI. It doesn't mean the bottom's in. It means that you're getting near a bounce spot. Let's leave it at that. But you might want to throw in some other indicators and just see how you're doing. And the MACD is not really breaking down either. Throw in stochastics. These are all oscillators. And you can see what happens when we get down here. Well, you usually get some kind of bounce eventually, right? So we usually are getting some kind of bounce in here. It might not be long-lived. Sometimes it's longer than others. But when we're getting under these levels on stochastics, there is some kind of bounce. Not a, I got to get in, it's going to double. That's not what I'm saying. What I'm saying is you can bounce. Now, technically, this looks unbelievably awful. Like I'm talking about short-term bouncing, but this just looks awful. Now, I'll show you this, Jen, because this is really a great, great learning tool for me to show people something. So see the angle of this? See the angle of this? See how that angle's steeper? Right? See how those angles are steeper? See this? Okay, so what you have here, Jen, is you have three angles, right? Each angle is getting steeper than the next. It's the exact opposite of what you want to see. So what this is telling you, like if I could draw, which I can't on this system, so I might start using TradingView a little bit more, unless maybe there's a drawing tool I can put on my screen. If someone knows that, comment, please. It would be helpful. But so if I could smooth this out, right, you would see a curve to this, right? So you would see a curve. You would take these, I think it's cosine. I don't remember from geometry, but you know where I'm going with it. So your angle is getting steeper. As your angle gets steeper, what tends to happen is the volume accelerates to the downside. And that's what's happening here. But that doesn't mean that you don't bounce back up to 195 before that happens, right? So just keep that in mind. Short term, I think you're grossly overdone here with that volume yesterday. Long term, this has massive, massive problems. Massive problems. Your other one, Amazon, and I think it's worth spending a lot of time on these. So I want to look at something really quickly here. See where we're at here. So we got stopped out of this for a loss, and now it looks like you're still not anywhere in there that I would be remotely excited about yet. Give me 1 second here. I just want to see this. Yeah, I'm not really crazy about that. Okay. All right. So if you take a look at Amazon, you have a very similar pattern, right, in Amazon to what I just described. Not on the volume side, but if I was looking to short something, to me, I think you see that level up there. You can see this little level here, right? And then you can kind of see exactly what I've been talking about before, okay? And as you see these, all this is telling you is, right? So should you expect this to be getting, better or worse, right? I mean, which way is that going to go, right? Long term, right? You have so much work to do in this. It's staggering. It really is. If you were going to put a bottom in, it was off this May off here. You're not even close to the bottom on this. Like, look at this. And now you have people wanting to go back, even when they're shopping. Personal savings, just so you know, this was at 7.5% this year when we started the year. You're now at 2. Okay. Credit card debt is at a max profit right now, or maxed out number on a percentage basis too. So see this level right here? Tries to bounce, fails, bounce, fails, bounce, fails. Every single one of these is a lower low. Every single one. Even this little one down here, Jen, look. Right? So I actually think if you were looking to short something, this makes a heck of a lot of sense. I think it makes a lot of sense to look at possibly shorting this. So do with that what you will. But I don't see this one turning and becoming rosy. Spent a lot of time on that, but I think it was worth it. I think we learned something today. So let's just keep going here. So we did Tesla, we did Amazon. What's going on, Terry? I think that you're seeing that kind of stuff happen with IBM. You're seeing it with Dell too, and kind of go from there. So, right. So do you really want to buy that? I don't know. I mean, look at that tear. I don't know that I'd be going crazy with it. Look, the market is definitely bifurcated in what they're, what they want to do here. That you're definitely bifurcated in the way that this is set up. What do I think you do with that? I think you look at that and you go forward and go, is that something I want to buy now? Now you take a look at like Merck. I don't know what that is. I'm sorry. Let's take a look at Merck. Right. And you're seeing these moves. This is not something I would buy. I wouldn't go near this. And I get why it's going up, but that's not my kind of trade, like at all. They move so slow that I get very bored, and then I wind up blowing them out. And I just know what kind of trader I am, Terry, and this is not for me. Buying these things at peak levels is not for me. I saw it. I mean, I did see the breakout. And I'm just showing you this on the monthly. You got over you made a 20-year high, and you could see how long you battled that area in here, right, Terry? So I don't know, man. I wouldn't play it. And you know what else would scare me about this? Where's my volume? So since I've been breaking out, the volume's getting less. So I would just be careful, Terry. I mean, I'm not saying it doesn't work, but I think there's much better names out there that make a lot more sense. Yeah, I'm not sure on that. So like, to me, just FYI, like I think energy is probably really toast. I think energy is going to come in pretty hard. That's just my opinion. If you look at economic cycles, right? If you look at the economic cycle of a market, and let's just see if we can do this crude oil futures here and see what they give me. Okay. So if you look at the economic cycle of a market, and let's see if they'll let me go back a month. See how far they'll let me go back. How far will they let this data go back? All right. So let me go to the 80s, right? Hold on. Let me just see if there's no more data. Okay. So when you go through an economic cycle and you go through a boom, right, and a bust, right? It doesn't matter when that is, right? And you're going through that right now. So what am I pointing out here? I'm pointing out the fact that this was all inflationary. This was all us inflating the trade, right? With the Fed just pumping money into the market. Growth, growth, growth. People are getting excited because China is opening up. You still need people to buy goods. And And I'm just suggesting that, maybe you get a short-term bump here in oil, but I'd be really careful, getting into these energy names. One of the trades, and this was in the newsletter, but one of the things that we focused on is I'm still looking to short this, but this was a really clear head and shoulders. If you look at the energy sector, if you take a look at here, look at this RSI. Watch this. So this RSI telegraphed perfectly what it was going to happen, like perfectly, right? So there you are, you're heading up. This is going down. I mean, when you see this and you're just looking at it going, you got to, I mean, it's just so easy. And then, but they play games, right? So you have a shooting star here, and then the next day it reverses, it smashes your hopes and dreams, right? Breaks down. This time it's going to go, and then it rallies back up. So that's why, when you get better and better, you start shorting into the rallies. But I would not be buying energy names here. I'd be on the complete opposite side of those kinds of names. I also XLP, like I just to go through this, just so you kind of understand where my head is, like you're there. I mean, you're at that reversal level. So you're really at a really critical level for like Procter and Gamble in that whole space. So it's either go time or it's not. And these tend to respect support and resistance way more than a stock. So just again, keep that in mind. BlackRock, sure. So I actually like the company. As far as a stock, you're just gonna have to watch what happens here. I don't really see any reason that this is the one that I would be buying versus buying like Goldman or JP Morgan, unless you had a real interest in it. Now, the reason I put this in is because I want you to see this. So, and I would start running charts like this. If you take one thing away from this, maybe remember that start running charts and start looking for these death crosses and start looking for stocks that are going to flip those death crosses and become golden crosses, right? When you flip and you become a golden cross, that becomes your major support, right? It's really hard for those to break because everyone's going to buy that level because you have two places of confluence. So you're going to get buyers down here usually is what happens. All right. So just keep that in mind. I don't think it's over, but I just think there's better names out there. Like if you look at here, let me show you what I mean by that. So here's XLF, right? And here's our death cross on XLF. Well, what's going to happen in the next couple of weeks? So let's just play this out. Okay. And let's just think about this. Let's just say that this stays stagnant. Well, every single day that this stays stagnant, right? Every single day that this is just above this line is going to go higher. So all we're going to do here is if you take a look at this, right? I'll show you I'm not going to drag it out too much, but let's go to the previous day, right? So the previous day you're at 33.40. Then the next day you're at 33.47. Today you're at 33.55. So every 8, right? We're moving basically 8 cents every day by this just staying stagnant where it is right now, right? So if you're moving 8 cents every day, then if you calculate that out in 12 days or 2 weeks, you're up $2 or you're up $1. I'm sorry. Okay. That gives you a golden cross in 2 weeks on the financials. If it just stays where it is, right? Everyone's expecting this just lift and let's get in and this is it. And we're really going to run. I'm not saying that you're not, but what I'm trying to get at with your comment about BLK is if you start thinking about the fact that 2-3 weeks from now, you could have a golden cross on financials, and that's unless financials obviously break the 200, break the 50. But if you just stay here in this range, so maybe that's something to think about and watch how it builds. Now you could always look at FAS and use that as a trading vehicle. I kind of like Goldman and JP Morgan. I think they're better trading vehicles. But if for something specific, if you wanted to be in BLK, for me, this trend line would be concerning. And a lot of people will look at their trend lines and say, once it breaks, it breaks. I like to leave them in. I think it's very telling when you get to that trend line and you fail, and then you get there again and you fail, right? And that just happens to coincide with this level over and over again that's in here. Now you are getting a golden cross, and that golden cross is ahead of the sector, which means that this has a higher degree of probability. I just don't like that resistance point. So long answer. Hope that helped. There she is. Hi, Anna. Long time. DQ. Interesting between CPI and today, how many people were interested in the market. And I would not go near this. Please, I just don't go near that. Run away screaming. So you have a death cross here. You have a left shoulder here. Head. Hope you're well, Anna. So you see that level right in here, right? So you just want to watch that like super closely. Now take these out. Okay. And now watch this. Okay. So you could say this is your neckline. I think you broke it. I'm not so sure that I would say that. I think you might actually have a neckline like this that you could actually use. Necklines don't have to be straight. So I would not be going near that. I'd actually be running away screaming. I mean, that just looks like a perfect short. I don't know where your head is with Arete, but that's not something I would know. Hope that helps, Anna. What's going on, Josh? SCH. As always, please like this video. It helps me greatly with the algorithm and it supports the channel. And the more people we get in here, the more ideas. I purposely don't run ads. I get asked to sponsor all the time. And I obviously you can see that from the lack of sponsors, it's not doing it. I don't know if this is the one that you were asking about, SCH. Is that what you're asking about? SCH, did I type it wrong? My dyslexia kick in? No, I don't have SCH. I probably have SCHW if that's what you mean, if you're looking at Schwab. But I don't know. Throw it out there again quickly. TCMD. Throw it out there again quickly, and I'll try to get to it. Yeah, I don't really like the little guys, but that's really hard not to pay attention to. So this kind of stuff you need to pay attention to. Like I can already tell that you're probably above your 200-day. Like this is really hard to not pay attention to. See these levels? And then see how you start lifting and then the higher lows, and now you're curling. You want to pay attention to that. You don't want to ignore this. So what does that mean for someone like me? Well, all I would say is with something like that is you just want to watch and see if you're going to flip there. But look, yeah, see, this is what you want to say. I actually thought you might have gotten ahead of it down here, but this is what you want to start looking for. These kinds of names, because out of think about it like a phoenix, out of the ashes come the new winners. And it's setting up. I don't know where your volume is on that. If you have volume, I would definitely be more interested in it. So let's just take a look at that really quickly. So you don't really have a lot of volume, but you're getting some more volume than you've had, aren't you? So I would not pay attention to that if it was of interest to me. It's definitely something that I would pay attention to if it was of interest to me. Let me go through some of these names. Sam, let's go through JB Hunt. I'm not going to have time to go through all those, but let's go JB Hunt because this will tell you a lot. So this is the kind of behavior you're seeing, right? These rallies up, but just watch these resistance points. Okay, just because you don't clear them the first time doesn't mean that you're not going to clear them, right? So just keep that in mind. Yep, please like this video. It helps me greatly with the algorithm. Thank you. Oh, you're welcome at any time. Hey, Mary. Murray. I called you Mary, my mom's name. Thank you for the input and explanation. Are much appreciated. Pretty new these concepts. Yep, we really focus information and education, right? There are no gurus. SOSXS. Let's keep going. Right. I'd be real careful with this. I'm on the other side of that trade. I'll just tell you. I'm on the other side of it. Could this rally? Absolutely. but I see a bear flag and a break, and I think you might get up there and roll. Depends what you're looking for, but you're playing right into the Fed day, Mitch. So like it's going to be crazy. Yeah, I'll give you the 60-second thing. What one big trade? You're in one big trade, okay, and you've been in one big trade all year long, and it's very different than what you just went through back here, right? Because people thought that this was normal. It's not. But what happened here was this. The one big trade started back here, okay? And this is where the Fed said, we have some issues, maybe, well, inflation's a little higher. We might have to stop buying bonds. Okay, we're going to have to raise rates. Okay, we're going to raise rates. Okay, and then GDP, CPI, that's what all these dates are. These are all economic events. Every single one of these is an economic event. Okay, this is an economic event, these cells. So you are tied to the Fed. You're always tied to the Fed, but you're way more tied to the Fed now than you've ever been in regards to this market. And we have to unwind that. So it's one big trade, meaning that as the dollar, let's use UUP, as the dollar rises, right, the market is going to sell off. Okay. As the dollar rises, the market will sell off. As the bonds go higher, the market will sell off. As the dollar drops, okay, people will buy bonds. All right. People will buy equities. I mean, you can look at this correlation here. I'll throw this up really quickly so that you can see what I'm talking about. So what we'll do is we'll compare so you can see it this way, because I don't want to have the time to really flip screens. But so we'll use their system here and we'll get into this. So we could just price compare. That should do it, right? There it is. UUP. So here you are with the dollar. Okay. Here's the dollar. There's the dollar up here, right? Now watch this. Here's the SPY. All right. See the difference? Look at that. Look at how this was the precursor to the bottom, right? So if you look at it from that period, let me clean this off and we'll get rid of this. Oops, sorry. I can't do it that way. So if you drill into this, when I say one big trade, here's the dollar. Boom, 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 right? I mean, you see it, right? So that bond, what happens? Equities go up because the dollar drops. It's one big trade. See what I'm getting at? This is yield dropping. Okay, why is yield dropping? Because people are buying bonds. Why are they buying bonds? Because the dollar's rolling. Okay, it's one big trade. All right. Until if the dollar doesn't rally, the market's not making a new bottom. I mean, you can timestamp that statement. If the dollar does not take out new highs, we're not making a new low. Period. Until we go through a major recession, and then you could. I hope that helps. Netflix. What's going on, Mustafa? Let's do Netflix because I really like that trade. I think the action yesterday was pretty telling. You're just rejection of this level. I don't know how many times you're going to reject there and not break. I mean, that did the gap fill and then it stopped. So just watch it. I do expect this to break out next year, frankly. B of A, I'll do, hey, Paul. And let's do RYAM and let's go from there. You know, let's do, I'm going to have to, I can only do a couple of these and I got to go because I'm already late. I want to do the Shoals. I like names like this that have rallied up and then are breaking down. This is actually bidding up today. Was it earnings? Okay, so you're bidding up a little bit. Maybe you got some news. See these gaps? If you can fill this gap up, forget this line for a second, remove them all. And you can fill these gaps up right to here. Or actually, even this is better right there. Right, that low right there, which is, what is that low? 27.38. If you can fill that gap in and you're actually rallying this morning, it's something I would take a look at and go from there. I'm going to have to jump here. I'm late and I got to hop in the trading room. If you're interested in the trading room, I did not have time to post a link. There's a link to join the wait list down below. We are on wait list right now. Everybody have a great day. We will go live at 2:00 into the Fed meeting. I think it'll be fun. See you soon.